Hi, so I thought today I would come on and talk about debt and specifically the various methods we can approach when it comes to paying off debt, especially if we have more than one form of debt. So it might be that there is a mortgage, a personal loan, some credit cards, even maybe a loan from family. Um, and what most of my clients tell me when we talk about debt first is their approach is quite unstructured, in that it is I pay the minimum balance that the bank instructs me to pay, and then after that, if I do happen to have anything extra, I will just pay it off randomly or whatever I feel like that month. So that is one approach, but it's not very motivating, it's not very goal focused, and it's sporadic. So what I work with clients is to have a more structured approach to it, and then and to do that, we talk through the four main ways of approaching debt and figure out which one works out best for them. Because again, like every other part of personal finance, how we approach it is quite personal to you. It needs to be motivating. Paying off debt is not fun. Well, it's nice to see those numbers coming down, especially at the beginning. It can feel like a mountain, and it's not for something that you're getting, right? Yes, you're getting debt free, but you're not saving for a house or have something that tangible that you can touch at the end, because normally we already have the thing that we're paying off debt for afterwards. So it's very important that if we do it in a way that's motivating, that's sustainable, that we can keep going at and feel good about. So what are the four ways that we talk through? The first one is called the snowball. So the snowball method is, if you think about like a snowball, it starts off slow, and then as it turns, as it goes down that hill, it gets larger and larger. So in that way, a snowball is where you pay off the smallest amount first. So what we would do is we would take all of the various types of debt, document them. I would help you calculate what the interest is on each, what the repayments are on each, what the terms are and what that's going to cost you, all of the full information on each form of debt. And then we would rank them based on each method. So the snowball effect, we would look at what is the smallest balance of all of the debt, and you would focus on that one first. So pay the minimum balance on everything, always pay the minimum balance to protect your credit score and not incur any late payment fines. So minimum balance, and then any extra goes off the smallest debt. And that's really good for someone who quite likes to see things, tangible achievements quickly. So this way you're going to pay off one. Let's say you have 4 different debts. You pay off one, you've only got 3 left. And if that's motivating for you, that's the one to go. So it's almost someone who quite likes instant gratification to keep motivated. That's a really good one. The next method is an avalanche approach, where same thing, you take the ranking and you look at which is the most expensive, which is the one that's going to cost you the most in the long run, and it's usually the one with the highest interest rate. Credit cards tends to be what falls into this category, and then same thing, pay off the rest, minimum balances each month, and then any extra you focus on the one that's most expensive. And it's the one that, if you're motivated to do it the cheapest possible way in the long run, it's the way to approach your debt situation, if that's what's going to keep you motivated, that you feel like you're doing it in the cheapest way, clearing it off. Then there's the Kiyosaki method, which was created by Robert Kiyosaki, who is the author of Rich Dad Poor Dad. It's a really good finance book if anyone wants to find ways or understand ways to better improve your financial situation. I'd highly recommend it. So, but within his method, he suggests paying off the highest cost per month. So even you would look at what the monthly repayments is on each form of debt and pay the one that's taking the biggest chunk out of your income every month. And that's motivating if it's really a large amount that is eating into your income every month, and releasing that debt payment will give you they'll all give you freedom, but this one will give you the most freedom when it's gone. Then that's the one for you, if that's what's important to you, to release some of your income, the most amount that you possibly can from your income in the shortest period of time. And then the last one is the one that's probably talked about the least. It is the emotional approach. So of all of them, they're all very practical, they're all very math based, but what about the one that causes you most stress? Is there one that just gives you a knot in your stomach every time you think about it? Maybe you regret taking it out because it was for difficult reasons. Maybe it was for something that you no longer have, maybe like a crashed car, for example, that got written off and now you're still paying for the car, but the car is no longer in existence. Or maybe it's something like a relationship with the bank in particular that you're dealing with, that you just no, I don't want to deal with them anymore, and the sooner I can break that relationship with that bank, the better and the less stressed I will be. Then that's the one you focus on most, pay the minimum balance off the rest and put any extra on that one. And then the reason I think this is so important that we take this approach is because it means you're doing what's right for you. You're doing it in the best way for you, not what you're told, I should do this and that's the way someone else told me to do it, but you know, it doesn't feel great. And it puts you in control of how you are managing it. And that's what this is all about, that you are managing your money. You are in control of how you are spending your money and improving your financial life. So if that's something that resonates with you and you have various forms of debt that you would really like to reduce and weren't sure the best way to go about it, you know where the links are. Like I said, as always, there's that free 20-minute chat that we can talk about your own situation. I have my calculators that we can quickly go through what each of those methods look like to you, and even like how many years you can reduce on each of your debt, how much it will cost you by each approach in total, and it really gives you full clarity as to the situation and then which one is best works for you and which one's going to be the most motivating and most importantly sustainable, because it's not easy, it's not fun, it's not sexy to be paying off debt. But if you want to really improve your financial situation, it is an important thing to think about and look at. So like I said, you know who I am. The links are all there if you get in touch, and I hope this was helpful, and I will see you again soon for the next video.